So what do you with all the high interest that we have right now? How do you talk to client about that? Like, how's the conversation like?
Yeah, I don't want to give all my secrets away, but like I talk to clients pretty frankly about it. So I talk to clients pretty frankly about it. Basically, you know, we are frankly in a high interest rate environment. It's not ideal. I don't like to sit here and the adage like put lipstick on a pig. It's not great for the consumer. I'm a consumer as well. Like I have a family, I have a home, like all that stuff. So I feel that just as much as everybody else. And so, but what I do tell them, and I think this is really important, is that as interest rates are high, and you've seen this in real estate, there aren't as many buyers and there certainly aren't as many homes, which that doesn't necessarily help each other. But if someone can go and let's say take a little bit higher of a payment with a higher interest rate, perhaps you're going to get a house that is going to be less money. And when I say less money, I say comparatively to when interest rates are lower. So without a doubt, interest rates, let's say right now, are hovering around, let's say 7%, just a round number, right? If interest rates tomorrow were to drop to 6% or below 6%, that house that you can buy for $250,000 is now going to be $280,000 just due to the amount of competition. Everybody is going to get off the sidelines and go in because interest rates are lower. So sure, I have a lot of clients that want to time the market and work with the lowest interest rate, but all the savings that you would get with an interest rate are going to be sucked away by the increase in property value. So this is what I tell my clients is that yes, is it a high interest rate? Sure. Is it not ideal? Sure. But the benefit with mortgages is that we can always refinance. So if you sit there and wait to time the market, sure, you might get a good interest rate, but that's just a talking point. You're not able to tangibly feel the value of that low interest rate because you're paying so much for the house. So now when all your friends who wanted to go time the market, they go out and they buy a super expensive house that's overvalued, you were able to then have the house that you wanted at the price point that you wanted. Sure, you took a higher interest rate in the beginning, but now you're able to refinance into that lower rate. So that's what I'm telling them. I certainly wouldn't wait. I don't want people to settle. I'm not saying that. Like, don't go out and buy a house just because they're like quote unquote on sale. I don't, even if they aren't. But like, if you find a house that you like, I wouldn't sit there and be like, well, I just think the rate's too high. Well, why is the rate too high? Like I can say comparatively speaking, rates are higher than they have been over the last few years. Like that's a fact, right? But if we're just saying interest rates are too high as an arbitrary statement, that doesn't really make any sense. Like if you're telling me, okay, the interest rate's too high and now it's affecting my payment to a point that I can't afford it, that's fine. Like I can work with that. That makes sense. But to just say a rate's too high and that's a reason to not buy, I don't really think of anything. I mean, I would just take the interest rate out of it as a whole. Like this is me kind of as a sales guy, but I think it's true. Like if I come to you and I'm like, hey, a $250,000, $300,000 home is like $2,500. Does that work for you? Somebody's like, yeah, that works for me. Okay, the interest rate's 7%. Does that work for you? Well, no, I mean, not at that rate. Well, why not? What does the interest rate matter? If the payment works for you, that's all you're concerned about. The interest rate is the only, affects the payment. So I think that's something to consider as well. Like there's a lot of talking heads, whether it be in like the media or throughout, my industry as well and real estate and all that, that says, yes, big tagline, interest rates are high, but who cares? If you can afford the payment, I'm telling you to go to the poorhouse to buy a house. But I'm saying if I tell you a payment, you're like, hey, that works for us, then go do it. What does the interest rate matter? That's what I tell a lot of people.
So if I'm a buyer right now, and I,
Yeah, Mike.
if I'm a buyer right now, how do I make my offer like stand out in a competitive market like this one?
There's a lot of different things that we can do as a lender as well as an agent. Like, you know, all the tricks of that, but I would say for us, something that we do specifically at my company, New American Funding, we hold 99% of our mortgages, meaning you make your payments to us. So that allows us to do a lot of things up front, effectively pre-underwrite the loan, and really give you the ability to, you know, we can present a full underwritten pre-approval, like, hey, it's been through underwriting, and all we really need is like a title report and an appraisal to make this thing close. And that's pretty powerful. You know, when you're a seller and you're like, hey, this client's been fully underwritten, you know, it takes like the what if out of it. There's always going to be a what if. You know, I can never know if somebody's going to lose their job or something bad happens and all the money that they have, you know, they can't spend on a house. Like, I can't predict that, but we can certainly control a lot of the uncontrollables. Another thing would be, I would say, is quick turn times. I think that's something that we've been really good at, and kind of what we did for you as well, and what we do for a lot of our clients is that the market demands speed to some extent. Not everybody, but if it's, say there's 15 offers on a house, and I can tell you we can close in 2 weeks, versus somebody with the same offer in 30 days, and they're trying to sell their mom's house that just got moved to the retirement home and they just want to get out, whose offer are they going to take? Right. So that's something that's really controlled. And that helps us a lot because we do all of our underwriting processing and funding locally. So, you know, it's not like like brokers are good, I guess, and, you know, banks are good and that, but there's a lot of red tape with banks and there's a lot of uncontrol with brokers. So when you're working with independent mortgage banks, like a company like myself, we control absolutely everything to an extent. Like, we follow guidelines, obviously, that we don't write, but we know that, like, we grasp that up front. That's not like a floating thing we're trying to attain, right? We've already looked at that stuff. So when you're able to control every aspect of basically the lending process, that's hugely powerful as well. I have, like, again, back to brokers, like, I think in some specific states around the country, like, I have a lot of colleagues and stuff who work as brokers, and nothing against them, like, that worked for some people just due to, like, their competitive price and the way that their the structure is for pay for clients and a certain lender. But I've always been on the side of more control around the lending process is better. The last thing I want to do is be like, all right, here's a file, ship it off to XYZ mortgage company, which would be the broker, and be like, okay, hopefully they come back and it's okay. And we don't know that in 3 to 5 days or something like that. So that's time and control that you don't have. So that's been a big thing. I get on the phone with a listing agent that's selling a home and be like, hey, I've already done my due diligence. My underwriter on this loan is a Teams message away. My processor literally lives in my same neighborhood. You know, so it's like, that's a pretty powerful thing. And I would say most other things are going to come from, you know, your side as a real estate agent. I mean, there's not anything like crazy we can do. You know, it's not like we can buy the house in a day and like all that fun stuff, but there are things that we can show that, hey, we are the experts. We've done our due diligence. We can make you feel comfortable about the process and the stuff that we've done up front. Because again, like I said at the beginning, like there's always going to be a lot of risk whenever you're selling anything. And so what we want to do is hopefully speak to the listing agent and they speak to their client and say, you know, Mike sounds like he's done his job. And he's done it for a long time at a really high level. And I think that works to our advantage.
Yeah, I mean, I can definitely testify to that. I mean, like you mentioned, with my own, you know, deal, we did it in what was it, 3 weeks, 2 weeks, and Do you want to quickly talk about like the process and kind of like what we like went through in that process?
Yeah, if you want to.
Mm, sure, just like an overview.
So we use specifically a product called MHDC, which I think is one of the best products ever. It's a Missouri like housing grant, effectively, for down payment assistance. It has very, very low interest rates comparatively to the market, and as a first-time home buyer and within certain criteria, generally, step back. Generally, most down payment assistance programs are going to be based off of income, and I'm not going to tell the world your income, but it's going to be within certain parameters that we have to meet. So we were able to do that product with a very, very low interest rate for you, which was great. And then from there, we basically, say, hey, it looks good. We have to go do an appraisal now. And that appraisal then comes back, hopefully at value or higher. And in respect to yours, I think we came in right on the button, if not a little bit higher, which was great for you. Equity is incredible, but again, equity is kind of just a word until you sell the house, right? And then from there, we are gathering a bunch of documents, which is really enjoyable. But it's a necessary evil, again, of the industry, in order to verify. And in the end, all a mortgage is verifying your ability to repay. And are there levels to that? Sure. But we do have to follow a set step of guidelines in order to attain that. So, we verified all that. We verified your income. We verified your down payment, which took a little bit extra time. But again, it's all documentation that most people have, and you certainly did. And then, on the back end, there's a bunch of negotiating. Not every property is perfect. Even if you build a house, it's not perfect. You might get in there in a day, you're like, man, I really wish I didn't do this with the kitchen or something. You know what I mean? But generally, when you're buying a home that somebody else has, you're going to want changes, or there's something wrong with it that they delayed. Like, you can walk into my house, and I'm sure there's stuff that I don't know about that somebody would want fixed. So the same thing with you guys and a lot of people is that you want to make sure that you're happy with the purchase, and you want to make sure that if you're not, how can we mitigate that? Generally, that comes in the way of seller credits or something to that extent. And then we get to the closing table. We sign the paper super quickly because everybody's on a deadline, and then we're done, and then you get the keys. It was a smooth process. There's always going to be a little bit of bumps because what I tell people all the time is the reason I exist is because you don't do this every day. You might buy a home 2 to 3 times in your lifetime, literally your entire life. I've worked on 2 to 3 loans in the last 6 hours. So if you think of that, like, that's where a lot of frustration comes in from clients. I'm not saying you weren't frustrated. You were a great client. Like, you roll with all the punches, but a lot of people are like, man, why do I need, like, this is ridiculous. Yeah, it's like, why do I need this? This is so ridiculous. Like, well, one, it's not the 1900s. We're not just like trading like wheat for a house. Right. Like, it's like there are a checks and balances system that we have to meet to lend you money. And like I said, like, you've done this one time or no times. So what are you basing your frustration off of? Like, yeah, I don't like to ask you for documents. Like, if I could be like approved on day one, sure, I would love to do that, but I don't think that would be really beneficial to anybody. It might not even be beneficial to the client. We might not know everything. Maybe they can't qualify for the home. So there's a lot of stuff that we do, and we do it all the time, where many people have done it once. So let the experts handle it, I like to say. Let us do our thing. We're working for you. And that's different than same with you. Like, you as a real estate agent don't get paid. Correct. Neither do we. We don't charge anything up front for a consultation. We don't charge anything for a credit pull up front. Like, we don't do any of that stuff. So the way we put food on the table for our families is by closing mortgages. That's how the whole thing goes. So we're not sitting here trying to impede your ability to get a loan. We all want to get to the same thing. There's just a lot of steps to get there.
What kind of things for you? Like what motivates? Like what keeps motivating you?
I think the idea that a lot of people have gotten out of the industry, and I shared something on my social media a while back. Like, there's been so many loan officers over the last 3 to 4 years that have just left. Like, it's been really, really hard. Like, and I'm sure you've seen it in this as well. Like, there's not a lot of homes. Interest rates are high. My World refinanced 70% of the country back in 2021 and 2020. So there's not a lot of people wanting to leave their 2.5% mortgages. So I think the proposition, like, I feel like almost like back in the day of when you're going west to like find gold. Like, it's like it's out there, and obviously it's a little bit different than that, but I think there's so much business out there left. And a lot of people think the exact opposite. I think with competition leaving brings more benefit and a prospect of success to me. And I also think, again, the idea of growth. Like, I want to grow a team. This is pretty lofty, but I almost want to reinvent the idea of lending as more of a youthful, tech-forward type of platform. I want people to feel comfortable with who they're doing their loan with, and not just some guy at a bank like that their parents used like 20 years ago. Like, I don't. Same thing with real estate. Like, real estate has gotten younger, I think, far quicker than lending has. And I'm not trying to be an ageist, but I do think, we're changing. There's a change of the guard in who the average client is. And I think it's important to be relatable to your clients and things of that nature. But what keeps me going specifically is just the idea of growth. How big can we go? How many people can we help buy a house? And what can we really do, and how can we make our mark?
So, in conclusion, I don't need a 20% down payment.
No, you definitely don't. No, I mean, not always. I mean, if you've got money burning a hole in your pocket, which
it's always nice to have the cash.
Yeah, but I talk a lot with financial advisors. I think that's important as well, because I'm not the smartest person in the world. I'm certainly not when it comes to money. Like, I can do a loan, I can work through loan products with the best in the world. But when it comes to actually like money and investing and all that, like, I don't know everything, not even a fraction. So I talked a lot to financial advisors, and you might think this too. I think it's important to have your money work for you. So if you come to 20% down, that may change your payment realistically on a house, not as much as you think. Maybe like $200. Because what we're talking about is a 30-year mortgage. 30 years, that's 360 payments. Like, how old are you? You haven't even been on this earth as long as your mortgage is, right? So just think about how long of a time you're breaking up these payments over, right? So putting down an extra, I don't know, $20,000, spread that over 30 years isn't really going to change it, right? But I talk to financial advisors, and if you put that extra, say 15% in the market, or any other, like a mutual fund or a high interest savings account, like, that is really making it work for you, as opposed to just having your mortgage payment like a little bit lower. I'm a big proponent of lower down payments. I really am. I will say my livelihood is based off of how much I fund. So there's like always this weird kind of crux in that, like, how we do is like the more money people borrow, right? But I'm not really jaded by that. I just do believe that putting 20% down just to do it doesn't make any sense. Like, kind of what I'm going back to is, say you put 5 or 3% down in a house, but you budgeted 20. Well, now you have 15 extra percent of that house. So you want to put it into the house, right? You now have 15 to whatever 20% more that you could do renovations on. You're talking about forced appreciation of your property. And if you go to say get a reappraised or reassessment of value in a year, I'd be really surprised if you didn't see a significant benefit there from what you're able to put in versus just like lowering your payment by $150, $200.
I love that. So now we're gonna go to our rapid fire.
Rapid fire.
First, best piece of advice for someone applying for a loan.
Get a grasp on your credit. Go to Credit Karma. Go on your credit cards. There's so much information out there when it comes to credit. Just have some idea. You don't need to be an expert. Just look at an idea of a score. Look to see if there's any problems, and if you don't know, ask somebody like me, or ask your financial advisor, or ask the internet. I don't know. Yeah, or ask them. Yeah. But I think it's really important that you get a grasp on your credit.
Question number 2, biggest myth about the home loan.
I think we just talked about it, that there are so many options for people out there. There's not just one size fits all. Square peg, round hole. It's not just one size fits all. I mean, we've done many, many loans where you put 0% down. VA financing, USDA, even down payment assistance, right? Like, there's so many options. Make sure you're working with a lender that wants to give you all those options. Because I can go on this forever, but it's rapid fire. But there's a lot of lenders out there who don't like to do the hard loans. And so it's important to work with somebody who is very well versed in all of those loans, which I am, and my company are, and my teammates are, that we want to make sure we're giving you the best option for you. Not the best option for us, not the path of least resistance for us.
What's the craziest deal that you've worked on?
That's a good question. I don't know how much detail I want to give, just due to
the privacy.
Yeah, privacy thing. But we've done some really high loan amounts. We've done some upwards of $15 million that have been pretty crazy. When it comes to like the properties are the craziest things you've seen. That's a tough question to answer. I'm gonna defer on that one, okay, just because I don't want to be in a courtroom in a year from now.
How would I share that to you guys do investment?
Yeah, oh yeah, for sure. Investment has been huge in St. Louis. It's a very it's an up and coming area, I think, to an extent. Properties are still very low for investment. So I think it is primed and ready for investors to come in. I mean, I get calls every day from people from all over the country saying, "Hey, I see this property for $60,000 to $70,000. We want to buy it and go for that." So yeah, absolutely.
Appreciate all your
one
last question. Where can we find you? Are you on social media?
Yeah, so I'm on social media. You can email me, call me anytime. I'm on Instagram. I think it's at Mike Bartarelli. And maybe we can spell my name later. Yeah, and then you can always call me. You can Google me. My direct cell phone right here is probably online. Just call me. I like to be accessible. I like to make sure that even if you're not buying a home today, tomorrow, or in a year or two, I think it's important to talk to the people that may know more about it than you. And this is an old line from my old company that I used to work with. I think it's really important. If you're even considering buying a home at any time, just call, because it kind of goes back to the credit and the down payment. Like, there's just a lot of stuff that people don't think about, and I can give you these little nuggets that you can start working on. And hopefully, if your goal is to become a homeowner within the next 5 years or next 10, I don't know. I don't plan on retiring anytime soon, but just give somebody a call. Let them walk through you the initial steps of the process. It's no hard sales pitch. Like, I just want to be there for people that want to buy a home and give them the best information possible. Appreciate it. Thank you, sir.